So I have a video I want to make. Skipping the gym for this shit today. I just had a video I'm going to be getting uploaded, and it was on accumulation and manipulation distribution sort of thing, and kind of PO3. Actually, no, it wouldn't be even that. It would be a continuation. This is not that trade. This is a back test I just did. I want to show this real quick because I'm going to have to put this in to do some of my homework. Market opens right around 8. We come into this daily fair value gap that we're inside of, which is right here. We come into a 4 hour as well. We're coming into a 1 hour fair value gap. Barely, don't even tap it, but we're seeing clear displacement, right? We come into the day. There's 15 minute, I believe there's 15 minute fair value gaps that we're respecting. Or we swept the high, and we're also inside of that daily. You can go to the 5 minute. What do you see on the 5 minute? Before that point, we had low resistance here, failure swing low, failure swing low, this one took it out, but we can even go down into the 2 minute. Bunch of high resistance. We keep sweeping out the highs, and we're leaving low resistance, right? And we have what? An unfilled range. We have a 5 minute down here. We have a 5 minute way down here that has not been filled, and that's where we, funny enough, what does this trade run for? 5R close to? Jesus. Into this 5 minute that's resting right here. Right? Beautiful. I just back tested that. This is from January 2025, this year, almost a year ago now. But I wanted to go into this video on PDI. I'm going to restart this.
What's up, guys? I wanted to add a video from today about PDI because, one thing is teaching a model, but another thing is showing you how it presents itself every single day and how you can maximize your understanding of it. So I previously made you a 40, 50-ish minute video explaining PDI and its entirety, its foundation, it's how it's put together, and, its use case and such. And so now I'm going to show you it in action. Today's price action. This was literally today, July 1st, 2025. So, as you can see here, going into the morning before New York session, we had London session chopping around. We had this accumulation period. You can see here that we can identify these low volatility candles, and we can turn off even this kill zones indicator right here. You can see the price is chopping around from 2 a.m. to about 8 a.m. So we can mark out this higher time frame accumulation period, and then going into pre-market, you see that price decides to break out of this accumulation and manipulate lower, right? So we break out of this accumulation period and we manipulate lower. This is going to be the bottom of our manipulation move right here, so I'll mark that out in red. And how do we know this is valid manipulation? Well, if you watch the previous PDI video, you know that I said a valid manipulation is a manipulation in which seeks to take liquidity or rebalance a range. You remember that, right? Yes, you do.
You said we want an actual good manipulation to be in like a 15 minute fair value gap, or sweeping out a 15 minute low or 1 hour significant low, right? Sweeping out these lows, in this case it was 30 minute lows here. We're coming into a 30 minute imbalance, 15 minute or higher, I like to say, right? We're coming into a 30-minute imbalance. We're respecting that imbalance. We have a bunch of low resistance resting here. We have an unfilled fair value gap resting here. Obviously, well, what's lower here? Well, what is price telling us right now? We just swept. We have accumulation where we just manipulated. We're wanting to see a distribution. Well, that is PDI, pre-distribution inversion. So he'll get into that.
We actually get both of those here, right? We have price sweep out some significant sell side and also trade in to a very strong key level, being this hourly bullish fair value gap. So this is what we call actually an intermediate low. It is a low resting inside a bullish fair value gap. So I'll mark this out once again just so you can see it. We have price sweep this liquidity and also trade into simple. And so then, after we have this manipulation move, we can see that price decides to open up a bearish fair value gap at the manipulation leg. Now, what is the overall goal of PDI? It is to catch the distribution move. By what? Finding that inversion in the manipulation leg. So if we see that this bearish fair value gap is getting ran through, we're most likely expecting price to distribute on the lower time frame as well. And so going into New York session, we can see that this 30-minute is getting inversed. However, we're not executing on this time frame. This is only serving us the purpose of understanding the narrative that yes, we are bullish, we can look for longs. So if we go back here now, right, we see that we have this is on the lower time frame, so it looks a bit more choppier, but this is all that chop from London session to like 7 a.m., 8 a.m. We manipulate lower, we sweep out that significant sell side, and we trade into that hourly bullish fair value gap. And now, I want to look for that PDI on the lower time frame because we have the higher time frame confirmation that we want to run higher. But now we need the lower time frame entry because we're not entering off the higher time frame. So what do we see here? Price is chopping. Oh shit, I skipped it actually. Price is chopping, and we start noticing what? A generation of liquidity above us.
Oh, even on the lower time frames, right? Go back to this trade. You can use this for continuations. You can use this for the mech, right? Low resistance and unfilled fair value gaps, right? The price should want to rebalance this range, especially with the higher time frame telling us, hey, we're just tapped into a daily, right? The 1 hour candle close up at this point didn't touch that fair value gap, right? This is a later trade. This will be later in the day, but it's just at the end. It's just telling you, like, it's just looking at what price is doing at this point. And what do we see? Low resistance. We're making high resistance up here around our stop loss. Boom. In reps. You could have even had your stop loss at, like, this low and hit a better trade, right? But we can go back to the video.
We're starting to get that lower time frame confirmation after we manipulated lower and started getting some displacement higher, right? We see that price starts accumulating right here. We can mark this box out in yellow as well. And we can see that price, wait, sorry. Ooh, what was that little giggle? The fuck? And so, as we're accumulating, we want to see what can price potentially manipulate into. As you know, as I've shown you with the PDI model, we look for 15 or 5-minute fair value gaps. And I can see right here in this leg, there's an imbalance in price. I've identified that there's an unfilled 5-minute fair value gap below. So if we were to take longs, ideally I'd want to see price manipulate into this unfilled 5-minute fair value gap and then get an inversion at the manipulation leg to the upside. So I wait for price to break out this accumulation, and I see that bang, we hit that 5-minute bullish fair value gap. Awesome. Now what I want to look for, that highest time frame inversion. That highest time frame inversion is actually going to be this 1 minute right here. And so I have this very clear accumulation, sideways price action, low volatility, blatant manipulation lower, trading into a significant level and rebalancing an unfilled 5-minute fair value gap. And now we're getting that confirmation that price wants to go higher by inversing this 1 minute at the manipulation leg. And with all that being said, how do we trade the PDI, guys? We take profits at accumulation zone highs or accumulation zone lows. In this case, we're taking longs, so we're TPing up here. And so as you can see, we'll enter right here. And bang. That is a PDI from July 1st. We've been getting a lot of these setups recently. I guess it's more common during summer. Who knows? But anyways, I wanted to just mark this out for you guys so you can see that, it's happening every day. And showing you that this works all the time. It's been working for a long time. It's an amazing model. And it's using one of the most foundational and useful, I guess, concepts of market, which is AMD. So it's very easy to understand. And I hope you guys are videos. But yeah, this is this was really cool because we got not only that higher time frame AMD forming, but then we also got the lower time frame AMD form as well. So that was definitely really cool. And I hope you guys enjoyed this little short video on what an A plus PDI looks like. Have a phenomenal day.
Alright, you like that? Sauce. So I want to go over, just from like today and yesterday, we've been getting continuations, right? And I didn't take those, but I'm not also a continuation trader, but I'm trying to dive into this. So I want to go over a video with you guys if you ever want to learn continuations. And just from the video I made earlier today, which I'll get uploaded, is open, high, low, close, open, high, low, close, open, low, high, close, open, high, low, close. PO3, I'm going over into continuations, which is more of a discretionary model, but it cooks. So sit back, enjoy, and then I can actually go over an example of a continuation model today. I did in the last video, but another example from today.
Discretionary model is the model that I use when I'm not trading my mech model. Okay, so mech model is simply going to be using all of these confluences, but I'm targeting an unfilled, unmitigated rare value gap that's going to be on a 15-minute or 5-minute time frame. For the continuation of the discretionary model, I'm able to target other targets, other draws on liquidity, like equal highs, equal lows, lower distance liquidity, data highs, and data lows. Now, these rules should be applying to the mech model to give you that higher win rate. And I'm going to be going over all of these rules and overall bias and all that stuff. But let's get into it, okay? And I'm first going to show you guys all these rules and everything, and then I'm going to show you guys just a little bit of a drawing, and then after that I'll get into some real chart examples so you guys can actually have a good understanding of what it looks like on the charts. Okay, so starting off strong. All right, we have our bias. Okay, so are we trading inside and rejecting a higher time frame P rate? Okay, so what I want to see for my bias is, are we delivering from sell side or buy side? Now I'll get more in depth with this with the bias videos and with my daily profiles, but you want this to be aligned with your bias, right? So are we rejecting a higher time frame P level? Are we respecting or disrespecting P raise? That sort of thing. Okay, and are we trading inside or rejecting higher time frame? So 15-minute, hourly, 4-hour fair value gap, order block, or breaker block. Okay, so that's what you want to be looking for. Now, do we sweep from that higher time frame liquidity? So what that's going to look like is going to be previous session, previous day. So previous session liquidity is going to be, that London highs, London lows. Those are going to be your key levels. Asia highs, Asia lows. Previous day also is going to be your key level. Previous day high, previous day low. And then intermediate high, intermediate low inside of a fair value gap, right? So you can have a sweep of liquidity, and you can also, now mainly for the continuation model, you're not really going to get a very strong sweep of liquidity for your continuation model. You're most likely just going to have tap into some sort of key level. And then with that, what you're most likely going to see with really the continuation model is we will be delivering from some sort of higher time key level, right? So you can either get, there's a bunch of different entries that you can get from this. Now, there's times where we will have a sweep of higher time frame liquidity like this, and then we won't have a mech model. Instead, we'll just have an inversion for value gap of the highest time frame. This could be like the highest time frame right here, and this is your discretionary model. And from here, right, this is going to be a target, like buy side liquidity here. Let's say we have like relative equal highs here or something. That's going to be a great target, and this is not going to be targeting unmitigated gap, right? This is going to be targeting some buy side liquidity. And we will be delivering from some sort of PD right here. Now, there will also be times where we will have this delivery happen, and then from here, we will then be rejecting a higher time frame P level like here, and let's say you don't get an entry with your inversion here, and instead we tap into some sort of 5-minute fair value gap, then this is still like valid. Now, although we are not trading inside and rejecting, trading inside of this higher time frame P level, right, we're bouncing off now at 5-minute, we still have that initial delivery being from the higher time frame P level, so that's all you really should be caring about, okay? So, okay, whatever. And lastly is time aligned with your bias, right? So you want to be trading during 9:30 to 11 and 1 p.m. to 2 p.m. 1 p.m. to 2:30 usually is like my cutoff time. Now there are times where we have like FOMC, right? And FOMC does does print, that news candle at around 2 to 2:30 p.m. So you do want to be paying attention to that as well. Open low high close and open high low close. So if you guys don't know what that is yet, I suggest you watch the PDI video, but it's basically going to be when we have price trading like this, you have some sort of accumulation, then we will have manipulation lower, then we have a delivery higher. And I do go over, open low high close and open high low close and pretty much all the lessons because it is a really, really important aspect of your trading, especially in this daily profile video I showed. And what you want to see if you're going to be bullish is a delivery lower first. So you'll have, your open here, let's say it's 10 a.m. open, and to be bullish, you want to see price trade lower into some sort of key level, and then have your delivery higher. Okay, and then if we're going to be bearish, you want to see price trade it like this, and then trade above opening price into a key level, and then once we're above 10 a.m. open, and then, or 1 p.m. open, 2 p.m. open, right? But the 4-hour candle is really going to be where you want to be paying attention to, like the 4-hour, that just means like 10 a.m. and 2 p.m. Okay. Also, 1 p.m. does have that delivery as well, since price is fractal. 1:30 as well, like the 30-minute candle, right? But I really want you guys to be paying attention to mainly AM session, especially if you're a beginner trader, okay? Because that's just going to be when the best volatility is during the day. Now, for your entries, okay, is there equal lows, equal highs, low resistance liquidity, or data highs and data lows? Or I should just put for clear sell side, okay. Now, is there equal equal highs and equal lows, right? So you want to be seeing if there is like a good target, right? So good targets look like previous, like prominent higher time frame liquidity, right? So this is your higher time frame liquidity, and we could be rejecting prominent higher time frame liquidity, but we also want to be targeting that higher time frame liquidity as well, okay? So if there's going to be also in your internal liquidity pools being equal highs and equal lows like this, then we could target that. If there's data highs and data lows, really, really good target as well. I should also put here like new day opening gap. That's a great target. So, oops. New day opening gap, new week opening gap, or just overall clear buy side and sell side, and that's just going to be those types of liquidity pools that we see right here. Okay, so there's any clear targets, right? You don't want to be taking trades targeting like a protected high and low. And what does that look like? Okay, so a protected high and low looks something like this, where we have maybe we've swept out, let's say, previous day high here, right? So let's say we have previous day high here, and price ends up sweeping it out. Now you don't want to be targeting this as a target, right? Because this is going to be a high resistant high. It's going to be a really hard high to target, especially if we haven't generated any internal liquidity, and I'll show you guys what that looks like. But if you're just targeting this recent buy side here as this like only TP, this is not.
That's what we would call high resistance, right? It already just manipulated. It just manipulated its higher resistance. So usually if we get this move lower, people are thinking full on reversal. What also is the higher time frame telling us? Well, failure to swing low, we have low resistance here, right? We were probably wanting to see a continuation. It depends on what the higher time frame is telling us. Maybe when we came back up here, we came into a 1 hour fair value gap, right? Or a 30-minute or a 15-minute. Maybe we inversed a 1 hour fair value gap on this leg, right? Maybe price is telling us, hey, we're bearish, and this high up here is high resistance, where we have lows down here and maybe fair value gaps down here, which is low resistance. You'd want to wait for a move up here. A lot of people are thinking, oh, continuation to go higher, or maybe a continuation to go lower, actually, and pushing to that sell side. So a tap into, external. Maybe we swept 1 hour lows here, or 30-minute lows here, or Asia session lows, London session lows, let's say, and we're getting to move higher. Maybe you could get your MEC, like people would think this is a MEC model, you take the inversion, right? Or maybe you wait for what? Tap into the 15-minute, 30-minute, the 5-minute, and then a move lower.
Obvious target, right? Because this isn't good liquidity pools. That's not a good liquidity pool, right? You want to be targeting low resistance liquidity.
Right? And that's why we also aren't targeting that high, is because that's high resistance. We want to be targeting low resistance because that raises the probability of the trade playing out.
Okay. Is there an SMT? So SMTs are going to be really, really crucial, and I do really love looking at SMTs, especially for the continuation model that I'll show you guys, because we can have an idea like this, and again, I'll show you guys down here. I have a better example. It's a lot clearer, but if we have an idea like this, right, and we have an SMT, let's say there's a 5-minute gap like right here, and if we have an SMT here, this is a really, really good sign that price is continuing to be bullish here, and this is going to be a valid SMT, and then we can from here take a long towards higher buy side. And now, is there an SMT also we should be paying attention to is at your target, right? So you do not want to be taking trades, especially when we have like an SMT at the high. If it's a really good target, let's say it's like, previous day high, you want to be targeting, and let's say ES is already taken out, and then we got this reaction from there, it's going to be very hard to target that because it's just going to be a high resistant high, right? ES already took it, and it's going to be hard to, also visualize this, especially as a beginner. I know I had a lot of problems with that because I'll be thinking, oh my god, but it doesn't really look like NQ took it, right? So it should go still take it, but ES already taking that high shows that it's not necessary to take it again, right? So you want to be then paying attention to, is there higher targets above previous day high, or is there higher targets above this target? That would make sense for price to disrespect this S&T and go higher or go lower. And we also went over that in the continuation, the conditions video, right? That if these conditions do meet up, and if we do keep respecting bullish P raise, then this would still be valid long to take, okay? Finally, or two more here, is this the highest time frame inversion? You do want to be trading the highest time frame inversion in your trading leg. And what your trading leg is just swing highs and swing lows. So if you have a leg like this, you want to be taking the highest time frame inversion from here, from this side of this low, and you'll scroll down or scroll up through the different time frames to see what the highest time frame inversion is. If it's a 1 minute, 2 minute, 3 minute, 4 minute, or 5 minute, and from there you can then target your buy side liquidity and whatever targets you have. Okay, but you do want to be using the highest time frame inversion. Finally, do we have these traded below equilibrium of the range? Okay, so now this is going to be specifically for, let's say we have a model like this, right? A lot of the times we won't go that deep into discount, especially for continuation models. And the reason for that is because we're going to be like very bullish, right? So a lot of the times it's not really necessary to go and hit equilibrium of the range. But let's say we have something like this, right? Where we have a really, really strong impulse leg, and then we have multiple for rally gaps here, right? We have 5 minute here, 5 minute here, 5 minute here. I will never really take, usually, very rarely will I take the first inversion off of this premium 5 minute. Actually, will really never do that because of how premium it is. Now, it will be okay if we have a run lower than that, and then we go here, and this won't, necessarily, we probably won't hit perfectly equilibrium. But it's still going to be more valid to take than this because of how premium it is, right? Premium discount is really just going to give you that best possible risk to reward, and this is enough for me to take a long from here, right? But obviously, ideal A+ scenarios for price to go down and hit discount and then trade higher. But if we have a rally gap that's like the second one here, and then we don't hit discount, it's okay. Okay. So again, I'll show you guys more examples from that. But let's get into the next one here. Is there equal high? This one, okay. So this is going to be for whether or not we actually want to be taking the trade. Okay. So have we already met the objective of the trading session? Right, so have we already had like a fat 300-point move, and is price most likely going to drop? Yes, right, and you want to be paying attention to then if 11 o'clock can do the work, right? We're most likely after having a large 10:30. The last 30 minutes of that is usually going to look something like this, and then we will have that 10:50 macro run. So you don't want to be trading during this time when we're chopping and we are generating liquidity. Okay, is there equal highs, equal lows, or low resistance liquidity where your stop loss would be? Okay, so what that looks like is equal highs and equal lows, right? I do not care about equal highs or equal lows if they're on the 1 minute time frame, and if they're right next to each other back to back, right? So back to back equal highs and lows, I don't care about. However, if they're spread apart like this, right? And let's say we have equal lows like over here, right? I do care about that. Let's say there's a low here and then there's a low here. I do care that if price wants to hit this, these equal lows, because then this is like a much stronger draw. Okay, but just 1 minute time frame, I'm not really caring about. Also, you want to be paying attention to the overall delivery of price. Okay, so if we have an inversion here, what you can see happen if we do something like this, right? So we have like this, and then we invert it, right? This is not going to be the best inversion. Now, why is this? Because displacement is very, very important when it comes to inversion for value gaps in the way I trade. Because this is not clear delivery. Why? Because now we have generated low resistance liquidity. What this looks like is just lows that haven't been taken by other lows. And that's not going to be good. A lot of times when we take a while to invert a fair value gap, low resistance liquidity will form. And this is going to be a stop rate. And this is going to be a sign that price wants to continue to trade lower, right? And I'll show you this, and we can also, use this as to our advantage when we're trading continuation models. Because a lot of the times what we will see is if price has failed to make a reversal, right? So let's say we have a move like this, and let's say price has failed to make a reversal, and instead we start generating liquidity, then this is a sign that price wants to continue higher. Okay. So do not be longing when we have low resistance liquidity at your stop loss, and don't be shorting when you have low resistance liquidity, your stop loss, and equal highs and equal lows. Okay. So we have clear lower time frame structure confirming bias. So not only do you want your external targets to align, you also want your internal liquidity pools to align as well. You want equal highs, you want low resistance liquidity, right? Models inside of models is what I always am saying. And what that means is the higher time frame model and higher time frame picture, if it looks like this, your lower time frame picture should look like this. Like if your 4 hours looking like this, your 15 minutes should look like this, and your 5 minutes, and your 1 minute should look like this. All of the time frames should be aligning to give you the highest probability setup. Okay. And then finally, or not finally, I keep saying finally, but if there's news coming up, I do not very rarely will I trade before news, and I do not suggest trading before news because the majority of the time it's going to be choppier conditions before news, and then we'll have a news candle, and that's a lot easier to trade because there's most likely going to be data highs and data lows, and you can take your trades based off of that, and it's going to be a lot easier, right? Now, times where I probably might trade before news will be like if we have 9:30, let's say there's like 8:30 news, and then there's 10 a.m. news. Give me 1 second, sorry. All right, I'm back. Sorry, my dog just started barking a lot. But here is news coming up, right? So I was talking about news, okay? So again, if we have 9:30, provide some sort of manipulation in the market, right? So if we have price doing this, and 9:30 has a really nice Judas swing lower, and then we have a distribution, 10 a.m. is most likely going to deliver to that draw, and we will not have that manipulation, right? So you always want to be seeing where the manipulation is in the market. This is the most important thing, basically, in all of my trading, and applies to all my rules, and applies to all my bias. Literally everything is manipulation in the market, and when is that happening, and where is that happening, most important, okay? So true manipulation, right, is going to be when we sweep out those lows, sweep out the highs. This is not true manipulation. You're most likely then going to see 10 a.m. have the manipulation, right? So always be paying attention to where that manipulation is happening and when, okay? And that will decide whether or not I'll trade before news. Most of the time, I'm not trading before news, though, okay? Now, am I in a good mental state to be trading? This is really, really important because a lot of the time, guys, I will be completely honest with you during the live sessions. If I am, either feeling emotional after a trade and feeling like I'm done for the day, and a lot of you guys won't understand that because you will feel these emotions, but you can't step away from the charts, which is the most important thing ever. For example, literally today, on this day, Monday, July 7th, whenever you guys are watching this video, I had a trade that was very, very good, and I literally missed my take profit by 2 ticks. It ran all the way for like 2 point something R, missed my take profit by literally 2 ticks, ran all the way back down, and stopped me at a break even. Now, I am a human, just like all of you. I'm human at the end of the day, right? I feel emotions, and that is okay. I hate people that are like, oh, you have to be emotionless when you're trading, blah, 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 and if you're not emotionless and trading like a robot, then you're going to be unprofitable. And that's true to a certain extent, right? I am, a lot of the time very emotionless, but at the same time, I'm able to understand my emotions, which is even more important. And what I mean by this is, for example, let's say I have taken, this trade, right, and I end up being break even on the day. Immediately, my thought process is going to be what? Well, I was up this much on the day, and that sucks. And now I want to be back at that point where I was up that much and claim that amount of profit, right? And immediately my brain starts going to these scenarios and how I'm able to make, back this money, or how I'm able to go back green on this day. And that is not the right way to be trading, right? You want to be in a mental state of trading where you are only focusing on the setup that is presented to you, not how much money you're going to make, right? And if you start getting into that mental space of, oh my God, well, I need to go back to green on the day. Maybe I took a loss, and now, maybe I was up on the day, and then I took another trade after that, and now I'm red on the day. I want to be back to the point where I was green. No. Already you're off to a bad start. So understanding what your mental state is, every time after you take a trade, every time even before you take a trade, ask yourself, am I in the right mental state to be trading? Have I accepted the risk is the most important thing. So I'm going into every trade, and I'm asking myself, if this is a loss, will I be happy with it? Okay? And if the answer to that is no, then I'm not taking my trade. Okay? If the answer to that is no, then I'm not taking my trade. And with that, you guys need to also be focusing on how much you're actually risking, right? I did post a risk management video that I do want you guys to check out in the premium community, and that's going to be really, really important. You need to be understanding your risk management because there's so many times where, I mean, literally, I'm taking a trade, and the reason I'm able to be kind of in that emotionless state of trading is because I know, oh my god, if I take one loss, then I'm going to take, you know, a 0.5% loss. And that is going to take 6 losses in a row for me to blow this account. Let's say I'm break even and I have a 3% drawdown, right? That is going to take 6 trades for me to blow the account. That is very, very unlikely. So I'm completely in a zen state of trading, right? So risk lower to the point where you are at that zen state in your trading and you don't feel any emotions. And then you can slowly start risking more and more and more until you get that mental strength. And, you know, if you start feeling emotional again, go back to whatever risk you were at before, okay? But just always understand your emotions is the most important part of trading. And have I accepted the risk, and then have I taken more than 3 trades a day? I'll just put this more than like 2 trades a day, actually. For you guys, I think 2 trades a day on the day max, right? And then have a 1% max loss limit on the day, right? Be risking 0.5% every day, and then have a maximum of a 1% drawdown limit on your day. I think anything after that, number 1, your overall mental capital is not going to be there, right? Your mental state's not going to be there. And 2, overall, your bias is wrong, your drawn liquidity could be wrong, and or 3, just conditions are not high probability, and it's just most likely going to be choppy, and yeah, you might just not be trading with your edge also. Okay, now let's get into some drawings really quick of the 2 different types of scenarios with my continuation model. Now, this is going to look like this, okay? So, the first scenario with your continuation model is if we have already taken out the buy side, right? So, actually, I want to show first this scenario. Okay, sorry. Let me show this first. This is going to be like the most A+ scenario, right? We have not hit the buy side, right? Or, you know, I'm just going to keep using bullish examples here, okay? And obviously flip this around and flip my wording around for a bearish example, right? So, for this example, we haven't hit the buy side yet, right? We made, you know, relatively equal highs, but it's very, very obvious that price is trending towards here, right? I don't need to really elaborate on this too much, right? But it's very obvious that we are delivering from sell side, we are respecting bullish theories, and we're disrespecting bearish, right? And from here, I need to see a pullback into a 5-minute or 15-minute for value gap, right? This is absolutely necessary for my continuation model, okay? I'm not taking trades, very rarely will I take a trade off of like a 3-minute, okay? I do not want you guys to be taking trades off like a 3-minute gap, because a lot of times it will be a stop rate, and time frame alignment on that is really just not the best when you're using a 5-minute for value gap. It's best to be using like 1 minute to 5 minute as, you know, your confirmation from that gap, okay? And then an A+ scenario looks like is we could do something like this. NQ could look like this, where we have an SMT at this, or NQ could look like this, where we have an SMT at this 5-minute, and it might look like you're trading against an unfilled gap, but it's actually okay because of that SMT, and that's even more confirmation that price is going to run higher, right? And then, you know, maybe we have an internal liquidity pool, maybe we even generate some low resistance liquidity here. But the thing I want you guys to note is you won't be getting very, very deep retracements, right? So you won't be getting, you know, deep sweeps of like sell side like this, and then we'll have that run higher. Most of the time for a continuation model, we're going to be pretty high into, you know, a premium, and this setup is still going to give you just a really, really nice win rate. Not the highest risk to reward, like with the, you know, Mac model still does give a really nice risk to reward a lot of times. If you're break evening and then leaving your runner, you can get really nice risk to reward because it's a reversal. With continuations, you're gonna get a little bit of a less risk to reward, higher win rate for this model. Okay. With that, I want you guys to note that there will be times where you can trade against an unfilled gap. Okay. And what I mean by this is we can have a 5-minute gap right here, right? And let's say price trades into this. And after price trades into this, we will open up a 15-minute gap right here, right? And then the inversion's happening, right? And you might be looking at the chart and saying, well, this still looks valid. I mean, well, this, you know, still looks valid, right? We hit this 5-minute, but this is now against my rules, right? Because there's an unmitigated gap here. Now, it is okay to take a trade because price will not go down here and resweep this, especially if we're bullish and we have a continuation model. Very, very high probability that price will not do that, right? Because why? Price has already mitigated inside of this gap, and price already mitigated this range, and already traded to this, okay? So it's going to be valid to take a long from here, and this is now called a breakaway gap, okay? So this is a breakaway gap. Now, from here, we have an inversion presented, and then we have our delivery towards this buy side right here, okay? So A+ scenario, and again, this is your A+ continuation model, and let's just show it again with the SMT, okay? Now, I'll show you guys the other scenario that we have, which is going to be if we've already taken out this buy side, right? So let's say we have this run lower, and then we have a run higher, and then we have like this super strong like impulse leg, and we already take out the buy side, and there was no possible entry for it, right? Let's say we just add something like this. Okay, now you do not want to be longing, and I see a lot of people get mixed up here. And there was a very similar scenario where we had a trade idea like this, and people were asking me, Blake, is this a valid long to be taken, right? We have an SMT here. Let's say it looks like this actually. And this is kind of what I went over a couple minutes ago. We had one gap here, but then we had a discounted gap like here. This is like the second 5-minute for value gap, right? This is not valid because 1, we are too premium. So there's 2 reasons this is not valid. 1, we are too premium, and 2, we haven't generated internal liquidity pools yet. So once we have taken the external liquidity, being this buy side, right, you want to wait for internal liquidity to confirm that price is still bullish, or so bearish, but we are still bullish. Okay, and the reason that you don't really need, you know, that low resistance liquidity here is because there's still a valid liquidity pool, right? There's still liquidity resting. But after price has taken out liquidity, we most likely generate liquidity after that, right? And you usually see this continuation type of model happen at around 10:50 to 11 o'clock, right? So that 10:50 continuation happens a lot of the time. You'll also see this happen, you know, maybe we'll have a big run up at 9:30 to 10, and then, you know, maybe before news drops or something like that, and then we'll have a 10 a.m. open low. But a lot of time it happens at that 10:50 macro. We'll have that delivery So you want to be paying attention to that low resistance liquidity and if it's generated, okay? And that can be in the form of like these stop losses resting here or in those equal highs and equal lows. And then you want to see that run happen, and then you want to see price trade slightly more discounted towards a unmitigated 5-minute or 50-minute gap that's lower into the range, and then you can take your long from there. So this is what also, this is still A+ in my books because of how high probability this setup is. And it's a very, very nice setup. And you also should be looking to the left of you and seeing if there are more.
So yeah, look, obviously we sweep 1 hour buy side. Let's just say we come back in. We're looking for continuation. Let's say higher time frame is still bullish. We come into this unfilled 5 to 15 minute for a little continuation. Beautiful. We also get maybe an internal SMT. And then what else do we see? We see maybe the first inversion, and we can take that inversion right there, or we wait for a retrace on that, right? We have low resistance. You probably would just take it. You have low resistance resting above. Obviously, look what's higher. Is there good, sexy, attractive draws resting higher than us two to go higher? Or is there better draws lower, right? Maybe there's a bunch of imbalance price resting higher, or there's more draws and liquidity that are low resistance resting higher.
For targets that will also make this like a higher probability setup. If there's like, let's say like an unfilled 50-minute gap here. Okay, boom, that's still like a good reason for price to go higher. At all-time highs trading though, this sometimes isn't, doesn't get presented to you. But yeah, I'm gonna show you guys 2 examples, or I'll show you multiple examples, but multiple examples of what this continuation model looks like on the chart. So let's get into that. All right, I'm gonna show you guys the first example when we don't take out the external buy-side liquidity and what that looks like. Okay, so the ideal scenario for getting in these continuation longs and discretionary model in general is getting in at the bottom of the reversal that happens, right? And again, this is going to be for RR reasons because then you can get like a really insane RR like this. But sometimes if we don't have a mech model, it's not really like my favorite to be taking these types of reversals only if it's I'm really, really confident in the reversal happening. But yeah, so let's say you don't get in on this, right? This is when the continuation model comes into play, right? What you want to be looking at is a 5-minute or 50-minute rally gap. So in this leg, we only have one 5-minute gap to go off of, right? And this is great because we don't need to wait for like a discounted one or anything like that, and we don't have to worry about that being unmitigated. So from here, we still have data highs intact, and we tap into this 5-minute gap, right? It is not necessary for price to sweep liquidity here, right?
On top of that, we have data highs and data lows. Data lows probably get swept most likely, right? And what do we see? Probably go for data highs. We can go back to what he was looking at too. Buy side liquidity up here, data highs. It doesn't sweep it out. This is, you could say this is low resistance. If it did sweep it out, this would be high resistance, right? We probably don't want to go for that. But it's low resistance. We didn't sweep anything out. We're pushing lower. Obviously, price is telling us like, hey, we're bearish, but this is on the 5-minute.
So in this leg, we only have one 5-minute gap to go off, right? And this is great because we don't need to wait for like a discounted one or anything like that, and we don't have to worry about that being unmitigated. So from here, we still have data highs intact, and we tap into this 5-minute gap, right? It is not necessary for price to sweep liquidity here, right? Because why? We've already swept liquidity to the left of us all the way over here, right? So we've already swept out this liquidity pool here. Okay, so it's not necessary for price to go down and sweep more liquidity. This is going to be a rebalancing price. And this low is going to be protected until the external target has been taken, right? This is in buy models, right? Buy models look like this. A market maker buy model has a distribution like this, where the lows inside of gaps will be protected until the high has been hit, and then it can be used as a target. Now, this varies between if we have 10 a.m. opening, and sometimes we will have the retweets happen in a lower probability condition, or if you're taking setups off of like a 3-minute rally gap, and then there's a 5-minute underneath. We're most likely going to that 5-minute gap, so don't be longing against them for the 5-minute. But yeah. That being said, from here we look at this leg. So from this side of this low, the valid entry here is going to be this inversion right here. So this inversion will take you to your draw on liquidity. Once it's closed above, you can go long here, and then stop loss placement on this can either be, we have an order block right here, so you can put it at this order block, or for the most safest, stop loss to be at here, and then you can target that external liquidity pool, go break even at the internal high, and then that's your beautiful TP for 1 and 2 RR. Still really good RR on this trade. So yeah, there is that. All right, I'm going to show you now another example of what a valid model continuation model looks like. Okay. All right, I'm going to show you guys another example, and this is not like the highest probability side. I'll say this first off, because we don't have any external targets at all-time highs here. But I'll show you guys the importance of low resistance liquidity on a lower time frame before these individuals come and why it's so important, especially from the 1032, 1050 to like 1110 macro. And it's always presenting itself. Like I'm always seeing this when we have like big runs in the morning. So we had a very big run. We took out all this buy side here to the left of us, and from here to continue being bullish, right? You would either want to see price. You want to see price do this, right? And then 1050, 11 o'clock will have that run higher, right? A reversal will just look something like this, where we have very clear displacement, right, and have very fast candles. Okay. So as you can see here, and this is a trade I did end up taking. We end up chopping around, and we end up generating lower time frame liquidity. Highs here, highs here, highs here, highs here, right? And what I'm looking at this current trading leg, right? We have an unfilled 15-minute gap right here. Beautiful. Okay. And then this is also.
See, you could come into the day too.
And from here to continue being
we could. Okay, pause. Let's go forward one. You could think, okay, maybe we have like market ripped up coming in today. Like I said, that 850 macro to 910 or 950 to 1010, 1011. It depends on the time zone you're in. But you could think, okay, maybe we want to get a reversal. We'll get clean displacement lower. And then you can see like your reversal to target like unfilled 5 minute here maybe, or an unfilled, just all within there. This is on the 1 hour time frame, right? We're pushing higher. Or let's say, like I said, logic, higher time frame context. Are we respecting bearish PD arrays in this case? If we're pushing higher, are we respecting bearish PD arrays? Are we disrespecting bullish PD arrays, or are we respecting bearish PD arrays, right? Like maybe it taps into 1 hour and respects it, and maybe we failed to inverse a fair value gap, right? And we've also swept buy side liquidity. Maybe you want to look for a move lower. Or if we are still, it's telling us we want to continue bullish, and especially we're coming into that macro, maybe we want to actually come lower into like, well, he's going to go into that 50 minute, come lower, and then we can get a discretional continuation model to then go higher and take just a small piece of pie. Or price just wants to, chop, 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 chop.
But I'll show you guys the importance of low resistance liquidity on the lower time frame for these continuation models and why it's so important, especially from the 1030 to 1050 to like 1110 macro. And it's always presenting itself. Like I'm always seeing this when we have like big runs in the morning. So we had a very big run. We got all this buy side here to the left of us, and from here to continue being bullish, right? You would either want to see price. You want to see price do this, right? And then 1050, 11 o'clock will have that run higher, right? A reversal will just look something like this, where we have very clear displacement, right, and have very fast candles. Okay. So as you can see here, and this is a trade that I did end up taking. We end up chopping around, and we end up generating lower time frame liquidity. Highs here, highs here, highs here, highs here, right? And what I'm looking at this current trading leg, right? We have an unfilled 15-minute gap right here. Beautiful. Okay. And then this is also going to be an unfilled 5-minute gap right there. Okay. And what I'm talking about, also, I want you guys to be paying attention to this, is we have 2 5 minutes in this leg, right? I am not. Remember when I was talking about like the premium and discount? There are 2 5 minutes in this leg, meaning that I'm not going to take this 5 minute. I'm waiting for the discounted one right here to hit, right? And this is going to give you the highest probability entry. Okay. So price ends up chopping around at around 1030, and then once that 1050 macro comes in, having this sweet liquidity here, and then boom, you get a 30-second inverse from this high to this low. There's a leg here that you can take, and then there's also this inversion that you can take right here. So you wait for this to get inverted. You can also take the 30-second if you're really, really confident in this. Probably like a close like here. But I like this 1 minute since it was the one holding us down. And once this 1 minute gets closed above, you can enter longs here at the close, or if you want to have the best possible risk reward, you can wait for a pullback and then just target a simple 1 minute. Stop loss at this order block. 1.6R. And then this did end up hitting on, oh, there we go. Finally hit it. Full PV there. Right? So that was a valid example, and I'll show you guys a little bit of a better example. But you can just see how continuation models are very obvious during that 10:30. Whenever I start seeing us chop like this, and then start generating liquidity, and then we get this pull, like it's a very, very high probability setup, and it's one of my favorite types of trades to take. So I'm gonna find a couple more examples for you guys. Now, before I move on, I want you guys to also, I have emphasized this, but I want you guys to just realize the importance of high resistance liquidity versus low resistance liquidity, because it will really tell you just your whole entire buy speed for the market in this way. And this is how I'm always looking at the market, is where we are generating low resistance liquidity versus where we're generating high resistance liquidity. What does high resistance liquidity look like? Right? We have lows here, and these lows are getting swept. And then we have lows here, and it's constantly getting swept, right? And sometimes they even look like this. Like a 3 drive here, right? And when we have that type of pattern happen, those stop losses are getting rammed, right? So liquidity is getting taken here, meaning.
What are we generating though when this happens? Low resistance highs.
Lows got taken here, liquidity ran. Lows got taken here, liquidity ran. So we do not have to go down and keep taking out this liquidity versus low resistance liquidity looks like this, right? And we are generating, right, at the highs, and then low resistance liquidity, and then high resistance liquidity at the lows. Low resistance liquidity at the highs, high resistance liquidity at the lows. Give me 1 second, there's a fucking gardener right outside my window. All right, so back to the sauce. All right, high resistance liquidity at the lows, low resistance liquidity at the highs. That is what you want to see if you're bullish, okay? And if you're bearish, you want to see the opposite, right? High resistance liquidity happening where? At the highs, and low resistance liquidity happening at the lows, okay? And that's that. All right, very, very simple way to just look at the market in general and give you your bias. So I'm gonna go back and find another example for you guys. Ooh, so this is a great example. Okay, really good example. I love this because this was a trade idea I took. Also, okay, continuation model. Buy side liquidity here. What's to the left of me? More buy side, right? So we do have more buy side to the left of us, but we did just sweep out a major prominent liquidity pool right here, right? And internal liquidity. Okay. So let's say because you're retarded or something, you didn't get in on this long here, right? And instead, we are getting a continuation model. this, where we had a run up, and 10 a.m. ends up taking this out. So a lot of things to cover with this. So first off, what do we see? We see two gaps in this leg, meaning what? I want to take the more discounted one, right? Being right here. What do I also see, guys, that we went over? Devil's mark, okay? So there's a devil's mark here. If you haven't watched that video yet, I guess I'll just explain that. Or I don't know exactly what video I explained devil's mark in, but I'll explain really quick. It's when we have price doing something like this, right? So we have a candle here, we have a high, and we don't print a wick at the low, or vice versa. We have a bearish candle and we have a low, we don't print a wick at the high, right? For this example, we have a candle here with an open high, and there's no low, meaning what? That price likes to do things like this, trade back, and then hit that low to make a wick, and then continue to be bullish here. Okay, so when I'm looking at this idea here, and I see that 10 taking this, I'm going to be paying attention to that 1050 macro, right? Not only that, I'm going to be paying attention to this discounted 5 minute, right? And I'm waiting to see if this wants to get hit, and I'm also going to see if we are generating liquidity. Are we generating liquidity? Looks like this, versus it's a very slow and choppy process, or are we going to have a very strong displacement lower and Drake candles down? That is not what I want to see if I'm taking a continuation model, okay? So as you can see here, price ends up from this, dropping around, and we actually had an idea here that a lot of people took. And I told people, I'm not taking this long. The reason I didn't take this, people were like, oh, but we're bouncing off a 5 minute, and then we have a 1 minute inversion. And there was also an SMT at this low. But why am I not taking this? Number one, guys, too premium, right? We are way too premium in this price leg. And then number two is we didn't hit that discounted 5 minute.
That's why you also don't pattern trade. That's a perfect example. But we're pushing higher. We're tapping into a 5 minute, and we just created an SMT. We want to go higher. What is the higher time frame telling us, right? And what it also, very juicy mark draws on liquidity. Devil's mark, where there's a candle put into price, but with no wick. Right? Price likes to draw back to those, especially on the higher time frames.
Process, or are we going to have a very strong displacement lower and Drake candles down? That is not what I want to see if I'm taking a continuation model. Okay, so as you can see here, price ends up from this, chopping around, and we actually had an idea here that a lot of people took. And I told people, I'm not taking this long. The reason I didn't take this, people were like, oh, but we're bouncing off a 5 minute, and then we have a 1 minute inversion. And there was also an SMT at this low. But why am I not taking this? Number one, guys, too premium, right? We are way too premium in this price leg. And then number two is we didn't hit that discounted 5 minute. And number three, we didn't even hit this devil's mark. Okay? Okay, so this gardener just loves to garden away outside my window. It's a garden. Anyways. And those are all the reasons, right? So instead, you wait for price to generate liquidity. Also, we don't have any generated liquidity. You are targeting a high that has been taken by another high. You're targeting just the most high resistant high there is. Instead, you want to wait for price to generate liquidity and generate some sort of break-even spots also. Break-even is very, very important in my trading. So that's what you should be paying attention to. Okay? How to get that gardener. How to tell him to leave. Anyways. So what price ends up doing is we generate liquidity. We trade lower. We hit that devil's mark there. Beautiful. And we get that bounce from there. And this is also, would you look at this? Sorry. A discounted 15-minute gap as well. Beautiful. Hit that. And then from here, you take the highest time frame inversion from, that trading leg that ended up sweeping out that liquidity. And here it's actually just a 1 minute gap. Beautiful. Beautiful risk reward. Beautiful RR. Long here. Stop loss at the wick because of how good this RR is. And then you close once that SMT gets made right there. And that's the trade. And beautiful. It's TP. Okay. So absolutely textbooks out there. And yeah, there was not a speaker that's so another example. Now for this final example here, guys, I want to show you the importance of breakaway gaps. Okay. And again, I just explained what a breakaway gap is. But as we can see here, we have a 5 minute bullish rally gap that ends up getting created, and this is your continuation model here. Right, we just sweep out liquidity. So for me to be bullish, I want to see price generate some sort of liquidity, trade lower, and then have a nice reaction after 5 minute gap. Now we end up doing this on this day. This is a pre-market trade. We generate some nice liquidity here. Not the cleanest low resistance liquidity run, but we get a really, really nice bullish reaction out of this. And then from this high low, we look at the trading leg right here, and the highest time frame inversion is this 4 minute. Okay, so the 4 minute highest time frame, and then you can long this 4 minute gap right here. Right, so looking at
See that?
At this idea. Look at the 15-minute time frame, and we see that price has a new 15-minute gap, right? And this is open at 9 a.m. And would you look at this? Price is now closing at around 9 a.m. So you might think to yourself, I'm not going to take this long because now we have an unmitigated because we have an unmitigated gap right here. Now the reason that this doesn't matter, guys, is because we have already traded into this 5 minute gap. We have already rebalanced this.
Which would be called a breakaway gap.
This whole entire range, right? If we draw a premium to discount also, this gap has this range has already been rebalanced, okay? So there's no reason for price to go back and slap into this unmitigated rally gap. This is going to be a breakaway gap. This is a really nice example of, not like a perfect example of a, continuation model because there's not a lot of low resistance liquidity here, but it's a really nice example of how a breakaway gap is being used in this scenario, okay? And then this does end up running for full TP and an absolute banger setup on this day. Alright, so that's pretty much going to wrap it up, guys, for this lesson. Hopefully you guys learned something about these continuation models and just
Okay, we're going to go into his most recent video today on continuation.
What is going on? Welcome to today's trade recap of the day. Today is Friday, December 12th, 2025. I'm going over today's price action. The one trade I ended up taking today, I made $28,000 Such a textbook day. I'm back on the fundeds. All of you people commenting, bro, why are you not on fundeds? It was literally for a day. All right, calm down. And I was trying to get used to my live account, so I was trying to just only focus on that for a second. But yeah, I'm back to copy trading all my accounts. I am unfortunately going to be moving brokers. I'm not going to be using AMP anymore. If you guys saw it from Friday, dude, my AMP account literally just went down, and I wasn't able to take this beautiful setup last Friday. So I would have banked so hard, but unfortunately couldn't take it. And then I've just been having like other weird issues with AMP, dude. I don't even know. Like it's been not logging me in. I had to reset my passwords. It's just, and the support is not that good as I thought. And also I can't even copy trade it with TradeSimulator. So I'm like, I might as well just move to TradeAvate. And it's a much cleaner UI and everything. So I'm honestly just moving to TradeAvate. And yeah, but I'm back on my fundeds. Hopefully everyone's happy about that. And first things first, let me show you guys the P&L. $28,673, $1,000.
That's a dream, bro. $1,000 across what? 26 accounts?
Across all my accounts. 1 to 2 are banger, as you guys know. I like risking around 0.5%, which is around $500 with my accounts. And I got a freaking banger 1 to 2 R trade. So clean. So let's get into it. All right. So, coming into the day, right? Starting off on the higher time frame, I am leaning more bearish. Why are you leaning bearish?
I had a video on this today, but let's look. We had the daily resting above here, right, in this range today. And we keep coming close to that. This candle got close to the daily that was resting above. This one did, this one did, this one did. None of them tapped it. Well, today we also have that previous day high that we wanted to see get taken, but we get an SMT.
Well, 2 reasons. Number 1 is what we did yesterday with previous day low. So if you look to the left of us here, we pretty much just edged previous day low by a tick. Or sorry, this was, at the time, this was Asia lows. This was Asia lows at the time, and we ended up just edging it, and then we started displacing higher. So what does that usually mean? When we edge lows, and then we also created, really nice 4-hour equal lows, perfect equal lows on ES, which I don't really care too much about equal lows when it comes to ES because they're always getting formed, but when they're on like the higher time from like this to 4-hour, it's a really nice draw, and it's a really good reasoning for me to be bearish, right? So edge previous day low, we also then traded up, and first things first, this range is really shitty, right? So there's not much to work with here, but I can still form a really, really confident bias just based on range trading, honestly. And then we started trading up, and what do? We ended up making an SMT right here with previous day high. So boom, SMT gets formed previous day high. We start displacing back lower. We get that displacement. We get that confirmation. We also do what? We trade into. We make an hourly gap, right? So from here, we got all of that displacement, right? Beautiful. Now, if I'm looking here, if I want to be bearish, then I want to see this hourly gap hold, and for this to send price lower, right? And what do? We end up trading to that hourly gap pre-market, sending price lower, and then we do take out this low. Now, I do not care about this low. A lot of people are going to think that this is a high resistant low, and they are wrong. So high resistance liquidity, guys, is really like, and this is what I'm always talking about, right? You always want to be targeting low resistance liquidity, and you never want to be targeting high resistance liquidity, right? You want to be having high resistance liquidity at your stop loss, right? So the reason this is a high resistant high, and this is not a high resistant low, and maybe for the time being you'll see some reaction, but we will keep continuing this model, is because this is a sell model on the higher time frame, right? If you look, this is in no key level whatsoever. So yes, we can have little sweeps like this, we can trade back up, and then we can continue trading lower, but these lows are going to get traded back to, and will continue getting traded back to, and this will not be high resistant just because we swept a low, right? So that's really, really important that I want you guys to know, is to not pattern trade these concepts of like high resistance liquidity, like, oh, it swept a low, and then you're targeting a low that swept a low. Yes, but if you look in context of everything else, what do we do above? Trade into an hourly gap, trade into a 30-minute intermediate high, swap that out, boom, really nice. This is your high resistant high, and we are in a sell model, and this low, again, is not in any key level. If we look in the 15-minute, is there any fair value gaps left of us here? No. Is there any 30-minute, any hourly gap? No. We're just displacing through all this. So I'm assuming that now the draw is previous day low, and these equal lows on ES, right? So we're going to start getting that displacement lower after trading into that hourly fair value gap, and then we create the range, right? Beautiful range here from this low to this high that traded into this hourly gap. This is the range we have, right? And we have a 5-minute intermediate high. We also have that's really it. That was all there was. There's a 5-minute fair value gap and then 5-minute intermediate high, right? We end up getting a beautiful soup of this 5-minute intermediate high. And why do I not really care for a price to go all the way up here? I mean, it could be cool, right? I could want to see that, but I am more leaning towards this not getting traded back to and just this range getting respected. Because if we're going to be bearish, again, this is high resistant. So this should be protected. That's what high resistance equity means, right? But these are more low resistant, right? Makes sense, okay? So we end up trading up, right? We had 930 do what? Start trading up. Hitting this 5-minute intermediate high, beautiful. And I mean, if you guys were trading today, you saw the candle that printed after this. So, okay, so low to high, again, for everyone learning my model, I trade the highest time frame inversion for value gap. That is, what makes my model so high win rate is I'm always waiting for the highest time frame inversion in the leg. So we have a 1-minute fair value gap here. Am I going to use this 1 minute? No. I'm going to look at the 2-minute. Do we have a 2-minute? Yes. Do we have a 3-minute? No. So the highest time from here is a 2-minute, right? And again, if you were trading today, you saw the amount of displacement that came from this candle, and it was just instant. And this is the trades that I love, is when you see your key level get respected so beautifully, we soup it, we wick it, and then you see your inversion and your fair value gap to the bullish side just get ran through. This is such a textbook trade. So just absolutely got wrecked. Here, we were just wrecking through all this, right? And ES, I'm also liking now, because now it looks like ES just wants to go for this low. These relative equal lows, right? It looks like this SMT is just going to fail. So boom, we get the 2-minute IFVG, and I'm just really targeting this as my break even, because if we want it to be really high resistant, then sometimes we can do stuff like this, create like a, equal lows, and then trade a bit lower. So I went break even there. That was like really the only like obvious swing, and then I hit TP right there. So really nice. I could have left it. I honestly was looking at left of us. I
want to go and look at this actually. Fuck, I don't want to get rid of this back test. Fuck, I'm gonna wait.
I left it for like this unfilled 5 minute, which looked good. Could have gotten a little bit extra points, but didn't want to be too greedy with my TP. And yeah, that's pretty much it. I don't really care if we go to previous day low. We also could just keep ranging like how we have been all of December, honestly. So again, being a little bit more risk off. You guys saw like I haven't been trading a lot. I mean, yesterday, bro, I took a actually stupidest thing ever. Yesterday, I took a trade with 1 micro, thinking it was 1 mini. So absolutely fried on my part. I would have been 2-0 in the week, and then also last week I would have been 2-0 in the week. But yeah, again, I've been like not trading that much this month of December, but really just focusing and waiting on my high quality setups, and having a higher win rate with less trade frequency has just been so much better on my psyche and my mental. And I've been trading a lot better, honestly. So hyped on that, and yeah, really banger end to this week. I do think this can continue going down to previous day low. But again, do I really care? No, I got my piece of the pie. I got what I was really confident in, and I took my setup, and I took my model, and I banked. All right, that's pretty much it. I'm not going to hold you guys here any longer, but quickly, if you guys want to get 90% off right now, Apex is running an after.
Beautiful, right? Beautiful. Yeah, but this would be a move off of that. I could keep this. Like I said, was there a 15-minute that we came into? Maybe right here. I think we actually do respect that. Beautiful. I'm going to end this back test. I can just go back. I want to do... Let's go to 1 hour. Make sure we're at the right time and price. There we go. Holy fuck, we have moved a lot. That's when I first started trading all these lows. Jesus. we can go over. I want to go. Where do you take that trade? That would have been. Oh, fuck me. $8.45. Get rid of that. What do we see coming into the day? We are coming into, well, I can get rid of this 1 hour because that got discussed, touched. Coming into the day, we come in, we sweep out, we come into this at 8 to 9, we come into this 1 hour for value gap, we're respecting it. Prices clearly tell me, especially with this, like, you know, that daily up there, but we also had an SMT right in here. Clearly bearish, in my opinion, clearly bearish on that SMT. Tied into also respecting this, we are displacing lower, respecting bearish PD arrays, probably going to go for what? Draws which were lower, which we know were these relative equal lows on here and a lot of low resistance here. So we come into that 1 hour. What do we see coming into it too? We have that 5-minute internal high right there. All that ends up displacing further and further. So this puppy play out. I think it was this, would it not be? I don't know, apparently I'm silly, but who knows? I'll get this uploaded, and this was going over, like I said, those continuations. Today, for 12/12/25, we had a beautiful continuation. The day before, we had a good continuation. So it's just going back on those videos, watching those, and then going back in price and just trying to find it yourself is great. But I'll get this uploaded.